Hey you guys, what's going on? So we're here on the price chart, and while this is fresh on my mind, I'm going to break this information down in two sections. One of the first sections that I'm going to break this down is about the spread, and then I'm going to break this down as the consumer or the retail trader. Okay, so up here we have Euro USD. All right, and I'm gonna show you guys how to find converters to find this information as well too. So we have Euro USD, and it's saying that my sell price, if I wanted to sell this information, or if I wanted to sell the euro for the dollar, I'm going to be selling it at 1.18561. But if I wanted to buy the euro for the dollar, and vice versa, I'm going to be buying at 1.18661. So let's break this information down a little bit more. If you subtracted 1.18661 from 1.18561, you're going to be paying 1 pip, okay? And that 1 pip is going to be times how much you value that pip at. 10 cents, a dollar, $10. That's typically your lot size, okay? So if I was going in at a standard, well, 1 pip, which is the spread or the commission I pay to the broker first, once I enter the trade, I'm going to immediately be negative $10 if I'm paying a standard, or my lot size is 1.00. So that's that part there. Now, why is this important? We need to look at exchange rates. So your exchange rate is over here on your price scale to your right. Now, if you guys look, my price scale is up here, and it's saying that in the green box, price closed on Friday at 1.18611. This number is highly important. Rock with me for a second. If this number is 1.18611, guess where it's going to show here? Over here in my buy market area. And what this means is, if I wanted to buy 1 euro, it's going to cost me 1.18661. But what's the transactional fee? It's 1 pip. Okay, that's why you subtract these two numbers, your buy and your sell price. Okay, your buy price is always higher than your sell price because the broker needs to make money in between. Now, why this is also important, if you've heard people say banks trade at institutional levels, or banks are using particular numbers, they're using supply and demand, what a lot of traders are showing you is that lower time frame, and as price moves, they're showing you the fluctuations in every point in the market with a broker, the bank could be buying or selling from. Well, that's true, but it's not true. The banks are looking at a number a day. Now, it's a difference between the bank that has traders on the inside that's buying and selling for them, and there's different when the bank is operating with foreign currency and imports and exports and such like that. They're operating from a conversion rate and a reconversion rate. That's why you have two numbers, but that's why this price scale is most important too. If we can trade Euro USD, what is the inverse? The inverse is USD Euro. That's where a conversion rate comes in at. So if I convert my United States dollar to the euro, I need a conversion rate. I need to know what rate am I exchanging that at. And on Owanda, I'm on TradingView, which is a platform that allows me to analyze my price charts. I'm looking at the broker Owanda's information. So what they're saying is, for every 1 euro I need, I can buy it at 1.18661. If I go to a bank, I should see that same information. I should say, hey, if I wanted to buy 1 euro, how much would that cost me? They should say, well, Shaquan, you should see it for $1.18661. Okay. Now, if I wanted to compare that information online, let's say you don't have a bank and you want to compare online, then you might want to go to owhile.com, find their currency converter. And I do have that up here. Here I am on awhile.com. And what I want to do is I'm telling them, I'm saying, hey, you guys, I'm looking at Euro USD, and it's saying, hey, this is the period ending Saturday, October 24th, yada, yada, yada. Well, we know that for us, the bank New York session closed on October 23rd. So for us, we're going to be looking at that last number on our price chart, where price closed at, which was at 1.18661. What it's saying is, if I'm buying 1 euro, which is what I want to do, I want to buy 1 euro, I'm going to pay $1.18661. Now, what happens if I wanted to sell that information as a trader? Well, I'm going to now sell it. The difference between here, I'm going to sell it for 1.1856. Okay, so that's kind of like the difference. I'm still going to pay the same. It's still going to be 1 pip, okay, on this day, at this current time. Because remember, as price moves, your spread will move and yada yada forth. But that is why closures are very important, because imagine a bank trying to keep up with all of those transactional numbers throughout the day. This is why the closures are very important. So if you're analyzing the daily time frame, you're analyzing the end of the New York session, that number that banks are going to use for their next bank day, their next business day, okay? So let's say if you go to another converter, what it's going to look like. So here I'm telling the broker, hey, this is not an Orlando broker, okay? So remember, every broker that you're looking at for their exchanges, their spreads are going to be different, which means you're going to be buying and selling that currency at different spreads, potentially at different prices. So this is why don't compare someone's broker to yours, because you guys could be buying and selling at different brokers. At the same time, you guys should know that I'm using tradingview.com. TradingView is not Orlando. Orlando is not TradingView. I'm using my broker, which is Orlando, and I'm using the platform on TradingView, which is Orlando, or the exchange on TradingView, which is Orlando, to look at my information, because I just like the way I can use TradingView. But I'm going to still cross-reference that information. But here is on Yahoo, it's a currency converter, and it's saying that 1 euro is going to equal $1.18. And then in this place here is a 7. So they've rounded up that information, which means I'm going to be paying more if I buy 1 euro here. So that's why I'm saying to be careful. So that's what they're rounding that information to. And then there are other exchanges that you guys can use too. As you guys can see, you can bring up other exchanges to compare this information. And I just brought up one that was under it. This one here is telling me that if I buy 1 euro, that I'm going to be buying it for $1.18626. Once again, it's still higher than the number that I'm going to be buying at. So this is why when you're looking at a broker, make sure you're going to be looking for a broker who compares this information so you can get the lowest spread and the best price possible. As you guys can see with my Orlando, I am getting the lowest spread, I'm getting a lower spread, and I'm buying at a better price, right? At 1.18611 versus 1.18626 and 1.187. Okay, it's not to say that Orlando is the best, but from what I just compared from these other two currency converters, that I will be buying 1 euro for a cheaper price. Okay, so this is what banks are looking at. You as the trader, once price opens, and if it stays above, you're trading from that exchange rate from the previous day's closure. Like when people ask what's the best session to trade, I don't give advice on sessions, because I feel like you can trade any session as long as price has your entry. You know, is it true that some sessions are more active than others? Yes, but it doesn't mean you can't get an entry in an inactive session. For me personally, I only trade closures. So every single day between 4:45, 5 o'clock to 5:05 p.m. Eastern Standard Time is when I'm looking for a trade, because I want to trade after the bank closures at certain areas on certain candles to put me into a trade at the best price at that time, like how I just showed you guys, versus trying to trade after that information where it may not be the best price or the best time for me to enter the trade. And I'm a swing trader as well too, so I'm holding my positions, which for me makes sense to trade on the daily time frame, because most traders are already analyzing the daily time frame. Most traders are already trying to enter after the daily time frame closes. My mind says, why not just enter on it if I'm already going to be trying to analyze after, you know? So that's just me. Some people are afraid of the spread. Some people are afraid of the risk, but my mindset is always, if I'm right, I'm right. Spread shouldn't play a part in that, and the risk should not play a part in that, because even if I were to take 5-day trades that day and lose them all, I could probably still lose the equivalent of one swing trade that would take a little bit more time to take me out of the trade, versus 5 that I could potentially lose throughout the day. So that's just my mindset. But hopefully with this has kind of opened your eyes a little bit more to what banks are doing and what they are looking at. Because let's think about this differently. If it costs me $1.1866 here to buy 1 euro, what's the reconversion rate? How much am I going to get back when I reconvert it? However, the reconversion rate could be different because now you are taking your euro and you are now buying the United States dollar. Okay, so now it is inverse. So they could have a different rate. So let's find out what that is. So here I have it over here where if I have USD and I wanted euro, so for every one that I wanted to exchange, I'm going to get back 84,274 on my dollar here, okay? But I'm going to be buying it for 0.84345, and then between that is your spread, okay? Let's see what it will be here on this conversion here. So if I have $1 and $1 and I want a euro, or inverse, if I wanted to exchange those, then for every $1 it's going to cost 0.843 cents here. And then let's go to this converter here. So United States, for every $1 United States dollar, then it will cost 0.84298 cents. Okay, so that means that if you really look at this, per every $1 that I would want from euro, I'm paying less euro, right? For every €1 I want, I'm paying 18 cents over. So that means that if you really look at it, the euro is stronger than the dollar. So once again, if the euro is stronger than the dollar, we should be buying that information, right? So over time, we should be seeing, if we go to a higher time frame, then you should be seeing that the euro is stronger. All right, so that's that part there. So I'm hoping you guys are seeing why the candle closures on the higher time frame is more important than those lower time frames, because there is a difference between institutional traders and then just what banks do when they operate. And so yes, we do use what the banks are doing. That's why these daily candle closures are very important, because banks are using that information Monday through Friday from when they're open, and they're using that information to exchange foreign currencies. They're using that information for imports and exports of foreign goods. So that is also why imports and exports information is always important as well too. So hopefully you guys learned something from this information. Hopefully I was able to open your eyes, and let me know what you guys think below. Comment below. Let me know what you guys think. So I'll talk to you guys later.